This is the revision of advanced audit and assurance. We will look at the marking scheme uh, for September-December 2021. We have 3 questions. First, we look at the question 1, Part A, Initial Audit. Generally up to 1 mark for each relevant point discussed, including communicate with the previous auditor, review their working papers for significant planning issues, consider whether any previous auditor's report are modified, consider any matters which were raised when professional clearance were obtained, consider impact of any ethical issues, the need for independent partner review, consider matters discussed with management during our firm's appointment, accounting treatment of construction contracts, need to develop thorough business understanding, including in relation to significant accounting policies, risk of material misstatement in opening balance previously applied accounting policies, firm's quality control procedures for new audit clients, need to use experienced audit team to reduce detection risks. B. Audit evaluation up to 3 marks for each audit risk evaluated, unless indicated otherwise. Marks may be awarded for other relevant risks not included in the marking guide. In addition, half mark for relevant trends or calculation, which form part of the evaluation of audit risks. Materiality calculations should be awarded 1 mark each. We have new audit client 2 marks, management bias due to sales of shares 2 marks, overstatement of revenue profit from analytical review, recognition of revenue support service, recognition of revenue profit, Joe contract, Johnson onerous contract, investment property, sale of designs, related party transaction. Part C, question 1. Audit procedures in respect of Nakatomi building. Up to 1 mark for each relevant audit procedures. Examples are provided below. Marks will be awarded for other relevant points. Review board minutes for details of the reasons for purchase to understand the business rationale and confirm board approval of the transaction. Agree the amount paid to the company's cash book and bank statement. Agree the carrying amount of the property to group accounts non-current asset register. To confirm the initial value of the property has been recorded appropriately. Obtain proof of ownership, example title deeds, legal documentation to confirm that the company owns the building. This is the building to obtain evidence of existence and occupancy of the building by rental establishments to confirm that the property has been appropriately classified as an investment property. Obtain and inspect rental agreements for the retailers who occupy the Nakatomi building to confirm that the property is not owner occupied and that it generates a rental income. Inquire as to whether the company holds any other investment property, and if so, confirm it is also held at fair value to confirm that the accounting treatment is consistent for all investment property. Discuss with management the rationale for the accounting policy choice to measure the property at fair value and confirm that the notes to the financial statement state that this is the company's accounting policy. With regard to the expert appointed by management to provide the evaluation for the building, up to 4 marks, obtain information to confirm the experience and qualifications held by the expert. Examples: certificate of registration with a recognized professional body, Obtain confirmation of the expert's independence from Ripple and its management team. Review the instruction provided to the expert by management and agree that the valuation method is in accordance with IFRS requirements. Obtain the final report issued by the expert and assess that the assumption and methods used and conclusions reached by the expert are in line with the auditor's understanding of the business. Confirm that the valuation has been carried out at the reporting date and in accordance with the company's accounting policy. If the valuation is at a different date to reporting date, assess the reasonableness of the valuation reflected in the financial statements. Reperform any calculations contained in the expert's working paper. Party ethical issue. After 1 mark for each relevant explain answer point, right? Conflict of interest between Rupert Co. and Willis Co. Conflict of interest impact on auditors' objectivity. Requirement that the professional accountant shall not allow a conflict of interest to compromise professional judgment. Risks related to the valuation of Rupert shares, risk of breach of confidentiality, full disclosure to be made to both parties and consent obtained. Safeguards may be used to reduce the threat to objectivity. Advocacy threat in relation to Gripper safeguards to reduce advocacy threat. Management responsibilities in relation to Gripper self-review threat to audits of my investment in Willis Co. Safeguards to reduce self-review threat. Valuation should not be provided if material impact on financial statements and involve significant degree of subjectivity judgment. Question 2. Ethical and other matters to be considered before accepting Flynn Co. as the client of the firm and performing the review engagement. We have general requirements. Okay. Ethical matters. Self-interest threat from incentive to secure the audit appointment. Advocacy threat from promoting loan application. Mary Sunshine, potential self-review and familiarity threats explained. Recommended safeguards to reduce threat to an acceptable level. Integrity matters. Incentive offer to Calico could indicate a lack of integrity. Reason for not appointing existing audit firm for review engagement. Risk exposure for Calico given Flinco's going concern problems. Competence and resources. Competence to perform the work. A review engagement should not be a problem, but due to high risk, more experienced and senior staff should be assigned to the team. Short deadline could impact on quality of the work performed. A deadline should be negotiated and extended if possible. ISAE 3400 consideration. What? The intended use of the information, whether the information will be for general or limited distribution. The nature of the assumption, that is, whether they are best estimate or hypothetical assumption. The elements to be included in the information. The period covered by the information. Engagement should not be performed if assumptions unrealistic or PFI not appropriate for use. Level of assurance to be provided and an expected user of the report. Impacts on scale of work to be performed. B. Evaluation of assumption. Monthly sales figures. Popularity of products. Monthly sales figures the speed at which sales can be generated, new processing facility, date of starting production, new processing facility, lack of startup costs, increase in production capacity, reduction in operating expenses and economies of scale, tax expenses, missing expenses, foreign exchange not included to mask potential volatility, finance costs unlikely to be static. Conclusion. Part 2. Examination procedures and professional skepticism. See model and survey detail of examination procedure covering general procedures, revenue, operating expenses, inclusion of foreign exchange transaction, interest and finance costs, tax and dividend cash flows, planned capital expenditure, going concern issue highlighted by the auditor's report. Question 3. A. Renko evaluation of subsequent events and final analytical procedures. Up to 1 month for each valid comments of evaluation and 1 month for each relevant further action or procedure in relation to inventory holding, inventory value, inventory allowance, receivable allowance. Part B. Uncorrected misstatements and impact on audit opinion. Encourage management to amend all misstatements, communicate the effect of all misstatements to those charged with government grant in appropriate accounting period, impact of the error, materiality, factual misstatement, and a judgment required qualified opinion on basis of material misstatement not pervasive, impact on basis for opinion. Paragraph. Machine sales, inappropriate accounting treatment, impact of error. Materiality, no impact on auditor's opinion in isolation as not material.